Hello, my name is Adrian Houston. I'm a former tax inspector and I'm now a tax consultant. We advise a lot of clients who have rental properties and we do their tax returns, etc. for them. But today I'm going to give you a little outline into the sort of things that you need to put onto your tax return if you're a landlord and the sort of things you can claim tax relief from. Firstly, and perhaps obviously, if you're a landlord letting out a property, you must tell HM Revenue and Customs, HMRC. I recommend that you do this in writing. Though you can do it over the phone, if you do risk to do it over the phone, I would strongly recommend you take a note of the date and time of your call, the telephone number you phoned, and the person you spoke to. Get their name. They will give you their name if asked, and if for some peculiar reason they won't, then ask for their supervisor's name. Then at least you have a record of the call being made, because sometimes calls don't accurately get recorded onto your tax record. When it comes to working out the figures, once you've registered with the Revenue as a landlord, they will send you a tax return each year if you didn't already get one. And they will want to know how much rent you received. Now, important point here, if you have, say, a letting agent, they may take their commission or 10% or whatever before you get the money. So you might have £500 of rent, but you might only end up getting £440 into your bank account. It's important that you declare the full £500 on your tax return. The £60 of agents' commissions you can claim as a tax deduction in the expenses, but it is important to get that top figure correct. Now, clients are always asking me, what can I claim for tax relief? Can I claim putting on a conservatory or putting in a garage or fitting double glazing, etc.? And here we have to look at a distinction that accountants feel comfortable with, which is between capital and revenue expenditure. Now that's a big subject, but broadly revenue expenditure is ongoing expenditure, typical maintenance of the property, that sort of thing. So if you put on a conservatory, that is capital and you can't claim it against your rents. But do keep a record of it, because when you eventually sell the property, that figure will be able to reduce your capital gains tax bill. If you put in something like double glazing, the Revenue has decided that they will accept that as if it was a repair, and so you will be able to claim double glazing the property as an expense against your rents. Other expenses you can claim are things like water rates, insurance, repairs, cost of paying somebody to do the gardening, that sort of thing. Now if you do the gardening yourself, no tax deduction. But if you employ a gardener to cut the hedges or the grass, then of course you can claim that and it will reduce your tax bills. Loan interest. If you pay a mortgage on the property, or if you've taken out any form of loan to purchase it, then the loan interest can be claimed, even if that was extending your own mortgage against your own house. So if you borrowed an extra £100,000 in order to go and buy a £120,000 rental property, then we know that £100,000 of your mortgage relates to buying that rental property. So that amount of your mortgage interest can be claimed. So if your mortgage was for £200,000 and 100 was used for the mortgage on the rental property or to purchase it, then that means that half of all your mortgage interest can now be claimed against the rents. What then, I hear you ask, if you get more expenses than income? Sadly, this often happens, and particularly in the early years. If that happens, then you have what's known as a loss. Now, unfortunately, being a rental loss, it's not of any use against your other income. You won't save any tax today by doing that. But the loss will be carried forward to the next tax year. So in the next tax year, perhaps your rent is higher and you make a rental profit. The loss then comes in and reduces that, and so reduces the amount of tax you would have to pay. If you have a loss each year, the losses will just build up and up and up And if you then sell the property and you've no more rental property, the losses are gone. But at least you won't have had to pay any tax on your rents because it would have been covered by expenses. The tax treatment of rents is slightly different for what are called furnished holiday lettings, but this is coming to an end in the year 2009-2010, so after that point there will be no such thing. So I will not dwell on that separate treatment today.